The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
What is going on, everybody? This is Jacob Shoup. You're watching the Morning Market Kickoff. Of course, usually I am on at 3 p.m. to 4 p.m., but we're going to do a little switcheroo on you. You know, I like the mornings, right? They're a little, not as many people, right? It's a little bit more intimate that way. They can be fun. I think we're going to have a fun day in this market. Definitely some interesting dynamics going on right now. Of course, we're going to have Scott Bessent talk at 10 a.m. Lutnick and Navarro might have been memory hold. I'm just kidding. Of course, they're probably still there, but they just haven't been as forefront as Bessent has been. That is definitely a dynamic shift from what we've been seeing, and Bessent tends to be, you know, somewhat better for the market. I mean, when Navarro or Lutnick would speak to me, certainly Navarro, I mean, you were getting horrible downswings in the market entirely. Bessent tends to be a little bit better. Of course, we're probably going to get some insight into what Bessent will be talking about today. I think we got that yesterday with the leak in his conversation with JPM, which is that this current trade war, which is effectively an embargo on China, is unsustainable. Now, what I will say to that, and you know, this market is very headline driven right now, which makes it can be kind of dangerous sometimes, right? So he says essentially that this is unsustainable. I think a lot of people maybe understood that. There's no way you can just maintain an effective embargo on China. It does give some kind of clarity to him saying, you know, we will at some point de-escalate this. Of course, Trump then comes out and says, well, we're not going to go zero tariffs, but it won't be 145%. And the market rallies very heavily on this. You know, I would say on that as well, is that Bessent kind of explained that it might be about 2 to 3 years until their entire vision is kind of played out with China. The deal, some kind of, you know, temporary deal might take about 2 to 3 months to achieve, maybe a little bit longer. You know, I would venture to guess that it might be a little bit longer if they're projecting that time frame for, say, Japan. I would add a bit of time on to some kind of deal with China. And then to fully kind of realize what the Trump administration has set out to do, it'll take about 2 to 3 years. Is kind of what Bessent is saying, right? And so, you know, what is the Trump administration trying to do? And again, we get some insight with Bessent on that, where he says, you know, it would be wonderful if the roles were reversed, right? So now we're a massive consumer of Chinese products. They would like to flip that, where America is the industrial manufacturing epicenter and China is the main consumer. That is, of course, quite a drastic shift. So we'll see how that plays out, because I think obviously that adds some complications, right? I mean, it's a complete deviation from the status quo. So we're going to watch that, see how it develops. Of course, we've been looking at some equities that could greatly benefit from something like that. You know, I've been speaking about this for a while, and if you guys have listened to my show at 3 p.m., you know, I've really liked the rare earth element miners. You know, you had even some discussion in the Biden administration of kind of building out these supply chains, right? So these are companies like MP Materials, USAR to a lesser extent. I don't like USAR because their balance sheet is bad, and I think it's very overvalued, comparatively speaking. And then Energy Fuels. That's the ticker symbol UUUU. We're going to pull this up right now. One of the issues that you ran into with MP is a lot of their rare earth elements that are extracted do go to China, right? And so they got hit very hard on that, but they've been holding quite well. Taking a look at Energy Fuels, you're up 2.53% today. We bought Energy Fuels last week, I believe Wednesday or Thursday. We had a nice run up, a little bit of a sell off yesterday, but that is kind of, this is a long-term hold first and foremost, and then obviously second, you had a lot of volume going to the upside. You can kind of anticipate a little bit of a drawback afterwards, but of course we're not concerned about that. Still green from where we bought it, and we want to hold this thing long term. They don't have too much exposure to any kind of trade conflict with Russia. And of course they're working with Chemours, okay, to establish supply chains for rare earth elements and critical materials. Besides for, I believe it's gallium, okay, they can produce all of the rare earth elements that China does. So very interesting. Want to follow along with that. I think even if trade relations kind of improve with China and a deal is struck, what we just saw, again, compounds the necessity of building out these supply chains in the US, right? We initially saw that during COVID, where everything locked down and we realized, well, hey, we don't really produce a lot of things that are kind of critical for our country to operate. Of course, pharmaceuticals, big one, and then critical materials here, right? And again, this idea that we might not be in this total, Pax Americana or something like that, right? Where people can come in and shake up the game a little bit, and then there are responses to that. I think it further drives the need for administrators to kind of look at options to build out these supply chains nationally. So that's where I like Energy Fuels. Their balance sheet is good as well. I like the CEO. I read a lot of what he, transcripts of what he says or what he writes as well. And I like the company. So we keep holding Energy Fuels. Again, a little bit freaky yesterday, but if you take it from a technical perspective, I'm much bigger on the fundamentals, but you have a massive run up, right? On huge volume. Then you get a little bit of sell off, right? There are tons of people that get trapped, right? That were buying at 640 to 747. They're completely trapped. You get a little bump. Hey, let me take some off the top there, right? Take a look at USAR as well. I'm sure this is, be kind of amazed if this were up. Yeah. This one's kind of funny, right? So you're back right at 840 million for a market cap. Their revenues are not really powerful in any capacity, and they have, they're in growth and exploration still, and their cash sits around. And again, I think I was doing this live when we were looking at their balance sheet, but I thought I was misreading it in that it would have to be in the thousands, but no, it wasn't, and they have about $2,000 in cash. So, you're talking about a small company like this that's still in a growth phase. You have zero debt, low cash. There's two ways you're going to do things. They are going to either take out debt, okay, or they are going to dilute shareholders. I'm surprised they have not done that yet. Really. It seems here that they did get an MOU with StudBuddy to deliver 20 metric tons of finished sintered neodymium magnets. Why is neodymium important? Well, this is going to go in as well to what we are going to talk about next, which is Tesla. Okay, so neodymium, as we've been saying, is going to be super important for building out robotics capabilities, right? And it does seem, again, that this administration wants to do that. I think there has been a general trend towards that in the recent past. And then, of course, Tesla, if they're going full speed ahead with Optimus, well, they're going to need a lot of what is called neodymium. So we're going to talk about that a little bit when we get back from the break. Of course, later in the show, the last segment, we're going to have Teddy Keckstat on as well. Very much looking forward to talking to him about some stuff. Stay right there, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, everybody. Jacob Shoup, you're watching the Morning Market Kickoff. Let's take a look at what we got going on right now. You have the E-mini futures trading up about 2.52%. Quite a good gap up, right? Reach about, what are we looking at? 5,456, come right back down. We'll probably test that level again. Dow Jones Industrial pre-market up 1.33%. Those Russell futures trading up 2.76%. That dollar creeping back higher. The DXY trading at 99.12. Now, what is unique about this is we are still seeing a strengthening of the yen relative to the dollar, which is unique, okay? One of the things that I do think is kind of positive, usually I would see that as maybe not super positive for equities, but what we are looking at right now is you do have a decreasing 10-year yield. We're trading at 4.27%. We were about 4.4% yesterday when I was doing the show here. Duration is down as well. You have the yield, at least 30-year Treasury, the yield is at 4.71%. You know, I mean, this is, it seems, right? We're even looking at junk bonds, right? I mean, your junk bond yields are coming down. So are people anticipating some very nice news from Pesavento? SOFR rates are down a little bit as well. Your cost of capital is still somewhat high, you know. Spreads are still a little goofy, which, you know, can indicate there's not necessarily a you know, hard position on whether we're still risk on or risk off. But this is improvement in the credit market, which I find interesting, and it gives me personally, I feel a little bit more weight behind some of these movements. Now, I'm not entirely sold, right? I'm still concerned really of, you know, refinance issues in June. I think that's a massive thing that we're going to have to deal with. I find it very bizarre that private credit is private equity is trying so hard to get credit out there to retail? Is that an offloading kind of thing? Not sure. This is stuff we're going to follow without a doubt. But to kind of further maybe give some credence to the validity of the move we're seeing right now pre-market, we got about 9 minutes before the market opens. You have gold coming off as well, right? We're off nearly 3% today. This is the gold futures trading at 33.17. Copper is up, silver off a little bit. Unfortunately, we're not seeing, really that move in tandem with gold from silver, right? And I think really what's happening with that is what gold was essentially functioning as, and I think it's been a while since we've seen it, but it really was that flight to safety, right? We saw initially people attempting to do flight to duration, and things still got kind of freaky, and then we saw gold really take off. Gold was still taking off at that time, but after the flight to duration was no longer considered valid, massive move into the gold contract here. I think this again gives some kind of validity to the move upside. As I've said, and again to reiterate what I just said, is that I think we still have some challenges ahead. I don't know if seeing this right now makes me want to go full port, get all my cash back into equities. Of course that does risk some opportunity costs there, but I still think things are a little bit uncertain. I'm sure Pesavento will probably pump today. Yeah, you're at 0.51% in the 10-year right now in the futures. This is wild. Apple's roaring up 3.58% pre-market. Google, how do they do on their earnings? Oh, they don't have earnings yet. Okay, this should be coming up soon. But you're up 2.29%. Lucid is roaring. And this is the other thing that is making me feel kind of weird. And this is what I brought up yesterday as well, right? Just kind of generally looking at what is doing well in this kind of condition. Again, I still think uncertainty does prevail, even though it might have been weakened a little bit yesterday with some of the leaked words from Pesavento and kind of what Trump spoke about. But if you look at my spec list that I have, which are just highly speculative, really just kind of dog micro cap companies that can rally, 20% in one day and then down 30. I look at that to see kind of like the risk tolerance of the market. And I have a large basket of them that I look at, and all of those things are ripping 7, 8% right now, okay? That, again, I think all things considered, that is, it's very wild to go full risk right now. And I'm seeing that, and what we've been seeing in the recent past, where I've seen my spec basket kind of rally up, is that the move wasn't sustained. Now, we are seeing some other things, again, like people getting junk bonds improving, your 10-year yields and 30-year yields coming down a little bit. I still think the yen's somewhat high. SOFR rate still somewhat high, but coming down for sure. I still think we're not out of the woods quite yet with this. But Lucid is up 3%. Again, I still think this market is somewhat, or this administration is somewhat hostile to EVs, right? Taking a look at Meta, it's up 5.49%. Let's take a look. Steel Dynamics up 2.29. Tesla. This is what we're going to talk about. Oh, put my headphones back in here. So you're trading up 7.62% in Tesla. Let's take a look. They had earnings yesterday. You're not reading that incorrectly. They had an EPS of 27 cents versus a 35-cent estimate. I think a lot of people are saying, oh, something worse was priced in. I'm not sure that is necessarily true. Again, I am iffy on Tesla currently. I think this new quarter, the problem is you have variables that aren't usually there in this quarterly, right? Mainly switching over to the new Model Y production. They did that very quickly. I think that is very impressive that the company was able to do that. But let's talk a little bit about what they reported, because I think this is important, and I don't necessarily think these were great. So let's take a look here. You have your automotive sales, right? And this is for the 3 months ended March 31st. This is on Edgar. This is not their report, but you can take a look at it as well. Let's look at their report, okay? You have the same numbers. you have the year over year for total automotive revenues, negative 20%. Okay, so you're looking at Q4, you had revenue roughly about $19.8 billion. This quarter in 2025, you have a $13.9 billion. Okay, maybe that has something to do with the Model Y revamp. I think they were still selling them at that time, like you could still register for it, but it depends when that gets reported, right? You have your energy storage revenue. Energy storage revenue is proving to be a pretty high growth business. It seems somewhat cyclical to me, but it's still somewhat new, so we kind of have to see how that plays out. At least it's somewhat new in its mature state. That is up 67% year over year, but something again important to recognize is that in Q4, you're trading at, what are we doing? $3 billion in storage revenue. And we're only clocking in at $2.7 billion for Q1. We still got to get some more data on that to see if it is truly cyclical. We'll talk some more about Tesla when we get back, because I really want to go through these numbers. This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, welcome back. Tesla trading off a little bit right now. You're trading at 6.55% to the upside right now. We were trading around 7.11. Some interesting stuff talking about in the den, Snowball and A to B. Who gets that $3 billion Inflation Reduction Act funding for the EV contract? But that would be USPS. You already have some lawmakers trying to rescind this. I think Trump has been very clear multiple times, especially on his campaign trail, that he does not like this kind of thing. He has openly criticized this kind of stuff. Fortunately, I do think the prototypes they had look kind of cool. I know they get hated on, but I think Canoe was the company that was building a lot of these. Does that pass through? I think it's in jeopardy, right? And maybe trying to speculate, wow, what a dump in Tesla right now. It might be kind of hard to speculate. Yeah, we have open market open. Let's just talk about that right now, okay? Then we'll get back to talking about Tesla and everything. So Tesla's off 5.7% right now, trading at 251.45. Some pretty decent volume to start the day. SPY not dumping as heavily. Okay, kind of makes sense. You have the composite trading up 3.55%. Oh my goodness, 574 points in the composite. Dow Jones Industrial trading up 782 points, right below 40,000. You get those Russell futures ripping at 3.25% to the upside. My goodness. And then the dollar staying somewhat flat. We're up about 0.2%. Crude oil coming down, still relatively high from where we were at the lows there, trading at 63.14 on the light sweet crude futures contract. Gold coming down a little bit as well, off about 3.29%. Copper up 0.26% at 489, still sub 5. And then we're taking a look at silver, off 0.73%. Look at these. Look at this green, guys. Meta roaring 6.5% to the upside. How about that? Let's see. Let me check the VIX real quick. Are we like plummeting in the VIX? Oh, wow. Okay, there you go. Breaking 28. That's really been the lower band of the VIX. This thing has remained pretty elevated as well, right? Yeah, okay. I mean, that is breaking that 30 level. Again, not necessarily indicates anything, but this has just been somewhat elevated. Of course, we had the high in the VIX for 60 there, and currently trading at 30. Again, there were a lot of puts out on the VIX for the end of this month that we're coming up on now to bring it back down to this bottom range, $20 to about $12. So that's getting smoked right now, of course. Wow, what an interesting move. So Tesla's still selling off. And it kind of makes sense. I mean, these numbers, guys, were not great for Tesla. This has gone back from we were getting to a point where we're mature, making good free cash flow, increase in revenue constantly. It was becoming a mature company. And then we've gone right back to speculative growth with a lot of the numbers in Tesla. Look at this massive gap up. Oh my goodness. Well, we'll see what Besson has to say at 10 o'clock. I will not be on, of course, but you know what? Maybe we could, we'll figure that out if we can maybe get that on. I know we were going to do a Basil replay, but might be kind of interesting. Okay, let's go back here instead of just looking at the green numbers, which is, of course, very fun, unless you are short. Let's go back to Tesla here. Some major issues I do want to bring up with the numbers that were reported. Okay, I mean, you're fighting right now, okay? Trading at 250, 249 seems like a near-term bottom here. Okay, so first things first, EV contract for $3 billion. I think that is at risk. Of course, it comes from the Inflation Reduction Act. It is not to say Trump won't do things that were in the Inflation Reduction Act, but it might be rebranded, and I think he has other things he's focusing on right now. Looking back at the numbers for Tesla, I think very, very tough situation. Okay, so your total revenues are off about 9% year over year, off in a major way from Q4 of 2024. And again, we'll really have to see Q2 to see, if these numbers stick. There's just a lot of variables that occurred in Q1 that, of course, were business specific, but switching over to the Model Y. Taking a look here, I mean, adjusted EBITDA, I mean, you're off 17% year over year. A gap for net income attributable to common stockholders, 71% to the downside. EPS attributable, still gap as well, off 71%. That's pretty intense, right? Free cash flow. This is the thing that really wigged me out quite a bit, where your free cash flow has gone. And right, I mean, this is the thing. CapEx was lower in this quarter too. It's just operating cash flow was completely, just annihilated which is very interesting. Now, of course, we're right back, we're still positive, okay? And if you look back at Q1 2024, you had negative free cash flow. You achieved that through Q2 2024 to Q4 of 24, and then we've really contracted quite a bit again. One of the things I want to bring up that I think is somewhat freaky about this cash flow, even though we're still positive, is taking a look at automotive regulatory credits. Okay, this is on their 10Q filing for Edgar. This is not their presentation. Obviously, on the statement of operations here, the regulatory credit was $595 million that contributed to automotive revenues. That is pretty intense. Without that, you get very, very close to nearly zero free cash flow, okay, in this company, which I find kind of weird. Net income, okay, of only $420 million. You get rid of automotive regulatory credits, right? Which again, are kind of trying to establish, or at least suggest, that this kind of stuff may go away under Trump. You get negative net income. So that is a little bit freaky. Gross profits lower. Total cost of revenue, again, still lower, not by too much. Service and other has increased slightly. Let me see here. Where is... This is the thing. Research and... For operating expenses, research and development, okay? So what is that? I mean, that's them trying to build out Grok. They were saying this contributed in a major way. Okay, yeah, it looks like it has increased roughly $250 million. Okay, that definitely could be a problem. When does the research and development for Grok end? I personally like Grok. I think I use it really as like a web search aggregate now. I think it does a very good job of, again, as I said, aggregating everything. I don't have to try to look through to see what is accurate. I tell it, listen, I want, if I'm looking up something specific, I don't want it pulled from, some other kind of news aggregator or, some personality online. I want first order things. And it does a phenomenal job doing that. And if there's a concept I'm not familiar with, I can ask that, it'll explain it, and then give further kind of reading, which I, of course, love and stay up way too late doing. But I don't think that necessarily goes down in the near future. Like, we're not end game Grok right now. This is a really tough thing. I mean, those credits, I mean, that is 89% of free cash flow. Ooh, man, it's interesting. I don't think it's totally clear yet that we're out of the woods here with Tesla. Folks, you stay right there. We'll be right back with Teddy Keckstat right after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, everybody. Jacob Shoup, you're watching the Morning Market Kickoff. I am just blown away right now. SPY trading up 2.94%. Composite trading up 3.84%. Dow Jones Industrial roaring nearly 1,000 points to the upside. We are 12 minutes into trading. Got crude oil flat right now, off a little bit, off about 0.2%. Let's go over right now, since it is a Wednesday. We're taking a look right on my screen here. The Tiger Forex report by Teddy Kekstat. This is one of our hidden gems on TFNN. You've got to check this out. Teddy releases an issue every Monday. It is very thorough. You're getting exposure to things that you're not getting in other newsletters. Of course, Teddy has spent a good portion of his life on these trading floors, CME, CBOE, CBOT. It is fantastic. I actually text Teddy sometimes when there's something that I'm not familiar with, certain concept, maybe different interactions. You get look into crude to currency pairings, which I think really makes this global financial market tick. So it is fantastic to have him on. Teddy, how are you doing?
I'm doing well, Jacob.
So first things first, you're having more headline-driven volatility in this market to an extent. Right, you have the SPY ripping up. We almost reached 3% to the upside right now. Composite again up 3.7%. Crude dipped down very low. Now we're back up to the 63.51. One of the things I really want to talk to you about is kind of the validity of this move, right? Of course, you have the yields coming down quite a bit in the 10-year, in the 30-year. It seems like the SOFR rate on the 1 year is kind of improving a little bit today. Still somewhat, cost of capital is still somewhat elevated. And the USD Japanese yen is declining. The Japanese yen is strengthening to the dollar. I'm kind of curious what your thoughts are on this, what you're looking at, what you're seeing as far as, maybe a validity to this kind of move. Yeah.
Okay, that's a lot of markets to cover. Well, right now I think what you have is, especially when it comes to yields, they're obviously retracing on the day. They're going a little bit lower, and they're taking out the highs from last week, meaning it's an inversion in pricing. And so that's what you're seeing today. Now there was a gap between the close of yesterday and the futures and today's trading, yesterday, and it's been rallying since then. So big money has been definitely chasing lower yields since literally yesterday afternoon, and that buying pressure is really strong right now. So that's why you're seeing especially a retracement back down for the U.S. dollar yen. They set a nice low a couple days ago, and it's a profit-taking bounce. So now what you're seeing is, after the bounce from a couple days ago, now you're seeing the trend basically come back into full force in front of the PMI number that we have. Yep. So now I would be very cautious on a daily basis looking at this as far as a trade. Okay, this is a very reactionary trade going on right now, and you want to trade the action, not the reaction. So reactions when a lot of traders get chopped up. So be very, very careful with this right now. You mentioned the SOFR rate. it's come down the cost of capital a little bit. Now, a lot of people, when they look at that rate, especially like historically, it's been closer to 2%, whatever. You got to realize that the SOFR rate hasn't existed for very long.
Right.
It replaced the LIBOR, so you're looking at something that is really basically a very short-term indicator because it has no long-term history. Okay, so there's no real validity as far as where it's moving in the short run or the long run right now because it doesn't have any serious trends to it. Okay, so LIBOR doesn't exist anymore.
Right.
But when you look at the rest of the yield curve, like I look at the euro dollar, not the currency, but the actual interest rate, which is American dollars on time deposit in Europe, that rate, okay, when I look at that as far as the short term, because that's a short and long term view because the euro dollar goes out every month for years, okay?
Right.
So that's a very big interest rate indicator that most people don't even look at. Futures traders definitely do, but most cash traders and most regular derivatives traders don't even really look at the euro because on a daily basis it really doesn't have a big move. It has had a very big move on a monthly basis. Like it's really, really breaking out to the upside. So that's where I think you really have to look at as far as what's driving yields right now is the short-term rate, especially when you have this confirmation from the euro dollar itself. So that means the broad base of short-term money, no matter what, for yields is leaning on the shorter end of the curve right now. And I think that's what you have to look at. So when you see, like, for instance, from yesterday's low in pricing to today's high in pricing for the 10-year and the 30-year, if you will, okay, it's a very nice move, especially the gap between the closes of yesterday and this morning, okay? That just shows you how much buying pressure there really is with this move, okay? So now, but it's also sideways. This just means we're pushing the upper boundary of the range we've been in for the past week and a half, and then going back up into the middle part of the range where we've basically been for the past 6 months. So I'm not getting over excited about the fact that we're just chopping around in a range trade.
Right.
You have to really look at it take it away from the daily basis and spread it out, and you realize that there's really not a whole lot going on. There's just really a lot that's going on since yesterday's trade, if you will.
Understood. Yeah, fantastic. It'll be of course very interesting to see how this plays out. And then again with the headlininess, I guess, of this entire market. I mean, of course you have Besant coming out. This can really move markets to the upside. It can maybe trap people if things aren't fully improving on these kind of fundamental levels. Teddy, what are you kind of looking at regarding light sweet crude or just oil in general here? We're trading really in a range around, I think, about 65 to 70. We dipped down to 55, and we're right under 65 currently at 63.71.
Sure. Let me pull it up real quick. So we got the crude, and why is this not doing this? Let's see, CL1. There we go. Okay, so as far as the crude, we talked about this with Tommy. We set a nice low back 2 weeks ago, and that was when we got down to that 55 area, 56 area.
Yeah.
And back then I told him, I'm like, what I'm looking for is this is a good bottoming area, at least in the short run, and then to possibly retrace back up to the 60 to 62 area, which would be the lower part of the range where we started to bobble around for a couple months. And if, support becomes resistance. So I think we're coming into, that question is previous support going to become resistance? And I think that's what it is. I called for this a couple weeks ago that once we hit this 55 area, from 55 to 62, 63, should expect a little bit of a range trade with a lean towards selling the rallies and making new lows again. Okay. So, and I think that you will see that over the next, month and a half to 2 months. Like, oil is not, it is trending lower, but it's not in a violent trend. It's not like parabolic like gold is or anything right now. You know what I mean?
Yeah.
So, and I think that, when you look at it in that context of momentum, it's a long-term trend play. So like I said, you look to sell rallies and you look to take profits on the lows.
Fantastic. Well, Teddy, we're coming into the break now. Thank you so much for coming on. It's always good to talk to you. Folks, I really got to stress, you got to check out the Tiger Forex report. It's a great report. Every Monday it comes out. Teddy, thank you so much.
Have a great day, Jacob.
You too, Teddy. Folks, we will be right back. Stay right there for a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Can you see my face right now? I mean, this is... Composite up 629 points. The Dow Jones Industrial, 1,200? Okay, right at 1,000 points to the upside. SPY trading up 3%. My goodness. Okay, crude oil coming down a little bit. Man, I really enjoyed that interview with Teddy, guys. If you want to watch it again, you go to our YouTube channel, Tiger Financial News Network. That clip is going to be up for you before the day's end there. Seriously, check out the Tiger Forex Report. You know, if it's your first time, you could do it risk-free. We have a 30-day money-back guarantee. But Teddy just has so much experience on the trading floors, and he's clearly just been a student of this discipline for so long, and it's great to have him on. He can answer questions I have that it's hard for me to get answers to elsewhere without doing a lot of research. Taking a look right now, I'm checking my text here. It says China tariffs likely coming down to between 50 and 65%. That's very different than just coming down by. That is still somewhat high. I mean, do we reprice back? Let me see here. I mean, again, my whole theory was, and it did this, but the November run-up with Trump was kind of nuts, right? Obviously, we are way, way below that right now. Went back to kind of like the yen unwind there in August, and that's really, I think, what our near-term kind of support is. That was resistance when it dropped down to 481, and we've really blown past that right now. We'll see what happens. Is there substantial volume today? A lot of what Teddy's talking about, some of the moves that could indicate that there's, validity to this is really sideways chopping. Of course, we're going to see, price discovery is wild environment. Excuse me, and this environment is wild. Absolutely it is. Absolutely it is. Listen, wow, Tesla's coming off, you're off about 4% from pre-market. Still green 3% here. 10-year treasury yield climbing right back up. What a market, huh? Listen to hear what Besson has to say at 10. I'm gonna do the news update. So stay right there. We'll talk a little bit more about some stuff. But thank you for tuning in for the morning market kickoff. We will see you tomorrow morning, 9 a.m. Of course, Tommy's on at 3 today.